All right, this is Bruce for Hola Prime, taking a look at Bitcoin, a few forex pairs, and the S&P 500 index. Starting with the euro dollar, I just want to point out that what's happening with this euro dollar on the weekly time frame. You can see we have an outside week and a week close in the euro dollar, but we also have weekly bearish patterns setting up in a number of pairs, including the euro yen, for example, the pound yen, for example, as well. Note the pound yen found resistance at this trend line and the 61.8% retracement, and now has closed the week back below the weekly 20 moving average. So it broke. So this is a failed breakout of the 20-week moving average. The low of the week is 191.97, but this would also indicate that rallies may be a good idea to watch rallies for potential short entries or continuation of this week. That may trigger next week, or maybe there's an inside week next week as well. Going back to the euro dollar, I want to go back to go now to the daily chart, which we've looked at before. You can see we broke through this double top type pattern, also rising wedge or rising channel pattern, and it's closing in a bearish position below this pivot point here, which is a neckline of this double top pattern. So the first target was down here, but 1.0777. But I would say, given how well it's coming down, I would anticipate at least a test of the 200 moving average here, which aligns with the 20 and the 38.2% level around 1.0723. Moving on to Bitcoin. So Bitcoin, we've been talking about a potential initial target on Bitcoin because of this upside target, because of the breakout of the purple 20 moving average. But since then, there's been a bit of a pullback, and now Bitcoin is setting up with a bullish doji hammer type pattern right at resistance of the 200 moving average. Now, the 200 is not a perfect line to use because it's been up and down all around here, but it seems like it's being recognized today because the high was right around it, plus the 20 moving average also is in that zone as well. So that means a decisive advance above the 85,051, which is the 20 moving average currently, should lead to sellers jumping into the market and more aggressive upside, in my estimation, given the current pattern. Now, I want to go into the 4-hour real quick because we can see something interesting there, which is the two ABCD patterns. So we have the larger fractal ABCD, and then we have the smaller one, ABCD. They both reach so they both reach price symmetry from 89,438 zone to 89,818 target, and notice that higher target is right around this trend line, but of course it's going to depend on when it is reached, and there's also a couple other levels within that zone as well, creating a bit more of confluence. Notice the 4-hour 200 moving average right here. That will have to be surpassed, of course. But this whole thing becomes incorrect, though, if there's a drop below the C point, 83,141, or at least has to be reanalyzed anyway. And so that gives a pretty good risk reward currently as it looks from my perspective. And then moving on to the S&P 500. So there was a bit of a scare, I'd say, earlier in the trading session where it was just lackluster trading that sometimes can lead to spike drops. But it recovered by the end of the afternoon, and now we have another higher swing low. Even though it's not by much, it is there. So this continues the potential for at least a rising ABCD pattern to be completed with, oops, I already marked that in there, with an initial target up here around 5,814. However, this is the key zone to contend with first, which is around the 38.2% retracement at 5,750 area, which happens to be the 20 moving average, the 200 moving average, and the 38.2% level. So that's the market's way of telling us pay attention to that price zone on the way up. But if it can get surpassed on this initial thrust, I think there's a potential to target for symmetry on this rally up here at 5,814. All right, that is it for today. Have a great weekend.